Hello traders, welcome back to Your Nifty Guy. I hope all of you are doing well. Today was the weekly expiry and what an eventful day it turned out to be. There were a couple of really good trading opportunities and the expiry special setup that I had shared earlier played out beautifully. In this video, I'll break down exactly how it unfolded, the thought process behind the trades, and what we can learn from today's price action. So stick around till the end, and if you find value in these daily breakdowns, don't forget to like the video, share it with your trading friends, and subscribe to the channel for daily Nifty insights. And on that note, we'll jump straight to the charts. Now, yesterday, what we had decided was we'll be creating a long entry above this particular high with a pullback. And what we had also discussed is about the opening, right? And a flattish opening is what I had told would be the best scenario for creating a entry on the long side. Now, we discuss a lot of scenarios, right? Because my thought process is anything can expect with in the world of trading. So that is something that we need to keep an eye on. We don't need to predict anything, but be prepared for everything. And the opening will actually decide a lot on which way the market is going. So for any trades on the long side, a flattish opening would be the best possible opening, keeping in mind we also consolidated around this particular zone near the closing yesterday. Now we opened flat and we did go up eventually. What looked like a good candle, which might be closing on a 5 minutes time frame above previous day's high, but then it came down and gave us a closing below here. Now, because I wanted to take a trade on the long side, I have been having a good trading last couple of days, I decided to jump to a minute time frame. Now, this is something which I do very rarely. I used to do it earlier, but then now I have made 5 minutes time frame my best friend. But then again, only for today's because today was the expiry as well, and we could expect some volatility. I had shifted down to the 1 minute time frame, and as you can see on the minute time frame, after the opening, we got two consecutive closings above previous day's high. This was the pullback, so this becomes our entry, right? The pullback went down below the opening candle low, breaking down below it, came up, went sideways for some time, consolidated. This was the entry, the 940 candle. Now, because this was on a minute time frame, I decided to trail it candle by candle at the start, right? Because at the start, I decided to keep my stop loss around the low of this particular consolidation around here. Once this swing came in, I moved my stop loss around here, and then I eventually exited my trade around here, right? And in this trade, I captured 32 points. Now, because again, it was on a 1 minute time frame, it does not make any sense to hold it for long, and I believe I held it for quite a long time. Trades for me on a 1 minute time frame have been very small and very short. But I still held it because the momentum was there today at the start of the day. As you can also see on the 5 minutes time frame, markets quickly went in our direction. Now, post this particular up move which came in, markets again retraced a bit. And if you can see, this is the place where we formed a double bottom. So the reversal setup that I have made a video as well on, it played out beautifully around here. All you need to do is have eyes to spot the change in character. And if you also jump down to the 15 minutes time frame, because on the 5 minutes time, sorry. Yeah. On the 5 minutes time frame, the structure is not exactly very clear as in for using the Fibonacci to get an exact swing. And that is the reason why I shifted to the 15 minutes time frame to see the exact levels where the market is coming and retesting. And again, as you can see, this is the zero point 0.5 to 0.618 zone. We did go down below it, but on a 15 minutes time frame, there was not even a single candle closing below it, right? There was buying which was seen from beneath those levels, and that was the reason, keeping in mind our reversal strategy, double bottom for formation around here. This is the place that I decided to go long with stop loss just below around these levels. And a very good, again, a very good, beautiful trade exited around here. Another 20 points in the kitty. This was a trade, again, it was in the later half of the day. The momentum around here was slow, but then not all trades are going to be equally same. Some trades will be good, some trades will be bad. And this is where we got the exit. Now comes the third and the most beautiful trade of the day, which is the expiry special setup. Stay tuned, be with me. I will be sharing the change in open interest data very, very closely today. Uh, so after this particular move, I exited around here. Markets moved in my favor again up in the morning, right after my exit, right? But then there should be no FOMO. You have exited the trade. That's it for you guys. And even if the market will move a lot and you would have lost on a lot of profits, that is not for you to take, right? So जो book किया वो अपना बाकी सब सपना, as the famous saying goes. So yeah, you need to follow your rules. So this candle fulfilled all my rules, plus scalping in an option buying trade. One, like I always say, one slight sign the market is showing of going against you, get out. There's no point in staying into the trade. And I did not face much of a decay. Because I was trading in the next week's expiry option. And another beautiful thing to note, or I want to share with you guys, is the first trade and the second trade that I took were both in the same strike price of the following week. And coincidentally, luckily, whatever you might call it, the entry price for both the trades that I took, right? The price at which I bought that particular call option was exactly the same for both the trades that I took. Now, this is something which happens very, very rarely. Had it been today's expiry, I am sure if you would, even if you would have been trading in the same strike price, the price that you would have got around here for this particular the first trade, you would not have gotten the same price around here in the second trade, just because of the decay that the options in this week's expiry would be facing, right? So this is the point which I try to keep across before every expiry, that whatever be it, pay a slightly higher premium, but shift your trading to the following week's expiry. Now around here, if you observe the price action clearly, prices were hovering around the 25,200 mark, right? There was a slight negative divergence as well. Now, these are the pointers or the thoughts that go on in my mind. So I'm just quickly pointing out the divergence for you guys. So as you can see, markets making new highs, RSI making new lows. So this is a negative divergence. Now comes the expiry special setup that we have. A double top was also in the formation. There are a lot of confluence trading things that were happening in the markets today. If you drew a trend line sorry, like this around here, on which from which the market was continuously bouncing and taking support off here, it was a breakdown of the trend line, a double top, and RSI divergence. Plus, here comes the beautiful thing around two. This is the cursor which I have placed around here. Uh, this is from between 2.5 to around 2.10 to 15. Markets were around 25,200. Now, this is what I want you guys to exactly look at while you are trading the expiry special hero zero trade, which comes in only on expiries, and that is the trade on the expiry day. If I get a sign, if I get confirmation from the markets, this is the trade which I trade in the current week's expiry, right? Because you get very cheap options. And in case if you had had a couple of good trades in the start, so like I had captured 50 odd points in the two trades that I had taken, and that was the reason why I can risk a part of it to trade the hero zero setup for even bigger gains. If not, I'll just lose some part of the money that I've already made. But then what is stock market trading without taking some calculated risk, right? Focus here is on the word calculated risk, right? So again, here market prices were hovering around it. So this is what I wanted to look at. So the put OI at 216. So this is the put OI and the call OI. So the put OI changed slightly and it was standing at 3.77 CR. The call OI was standing at 4.28 CR, right? Both the call and the put at 25,200 were heavy, as in there was a good amount of call writing, there's a good amount of put writing. Now, all we needed to see was which amongst these two would be the first to start exiting their positions. And again, with markets actually trying to break down below 25,200 and the confluence trading setups that the market, the price, the story, the side action that is going on in the market, hinting at the people who would have long the markets being trapped, right? So somebody has to be trapped to get a good momentum based move in the market. And that is what we felt here was that the put writers would be trapped around here. The signs were going in that favor. But then we do not enter based on the signs. All we need is to see and wait for confirmation. So if you just slightly move the time ahead, what you see here is the change in OI. I'll quickly replay the change as well. Put option people, put writers exiting, call writers adding, right? So this is what we want to see. And if you look at the momentum also, this is not a small change in OI. So the put OI change, if you can look at in this particular box, which is opening, 25,200 put OI change is minus 90.87 lakh contracts that were being exited. That's a big change from 3.77 CR the at 210. In just 20 odd minutes, the OI stood at 2.86 CR. Now in the live markets, I keep this thing fixed it on the last 5 minutes, and because this is a replay function, I am just keeping it uh, stagnant for you guys. So you guys will be trying to see the change that is happening, right? So you can see the momentum with which the people are exiting this particular position. So again, from 215 or maybe even 220, 220 to 228, again, minus 1.16 CR people who would have exited this particular strike price. And that led to a good momentum on the downside. I entered in the 25,200 put option. It formed a very beautiful double bottom at the so the prices around here formed a double top. So put prices formed a beautiful double bottom as well. The entry price was a very, very minimum 21. The premium that I entered at was 21, and I exited it at around 72 odd price, right? So again, I even though I had entered at 21, I had kept my stop loss just below the double bottom low. So that was I'm not going to risk the entire 21 points as well. The stop loss was coming down to some 10 odd points, and that is what I was willing to risk with the 50 odd points that I had captured in the two trades in the morning, and I was willing to risk around 10 points from that 50 points that I had captured in the morning, and again, I entered in that particular strike price with a very small stop loss, treating it as a hero zero trade. It went up to a huge momentum. It closed at around 90s or something. I exited at around 72. So capturing roughly around 50 more points. So in total, 100 points were had been captured in today's entire trading. But then again, that is something secondary. Right now, I am also only just discussing the points that I had captured because there was a demand which is coming in to explain what was the momentum or what was the trade and about how many brief odd points that I am capturing in each particular trade. Otherwise, these things are secondary. The main focus, primary focus should be on learning the setups and the thought process that goes on in my mind while I am in the live market. So I hope I have been able to explain the the two trades that I took in the morning. Both were on the call side, and then the third hero zero trade that was on the put side. And what are the things that I look at, right? The price action combined with some trend lines, combined with RSI, combined with OI, and the change in OI, right? So these are the things that I was looking at today, and I hope I have been able to explain it clearly. In case if there are some doubts, please put them down in the comments, and I will try my best to clarify them. Right. So I believe today's video is going to be a little longer just because there was a lot to speak about for about the trades. And for tomorrow, again, I don't need this. We don't need this. We don't even need this. I'll keep this particular so this is the daily time frame. a retracement or resistance zone. But since we have not got a closing above this, had we gotten a closing above this, I would have deleted this. But since because we have not got a closing above this, I'm still keeping this in mind on the charts, right? Now, if we are to look at a retracement, maybe see there's a good upper wick in the markets that have come in. So maybe the markets are ready to retrace a bit. That is what something I believe if the market has to go up, it cannot go up like this, like in a momentum-based parabolic move, right? It has to come back, give us some pullbacks, and then go up. So in case if the market is going to give us some retracements, we need to be ready with our levels. So this is what I will be marking. So this is simply this low, this high, 0.5, 0.618. A good support zone should be here. Now, a good thing to note on the 75 minutes time frame is that the structure is still very, very intact or in a lower high, lower low formation. So this makes this particular low very important low for us. So if that low breaks, we are going in for a structural change on a 15 minutes time frame as well. I'll keep the plan of action for tomorrow very, very simple. Right below this, we are taking a short entry. Now, even if we are take maybe say for example, market opens flat, we go down, we get a pullback, and then we continue the trade. This is the place where I will be looking at the price action very, very carefully so that in case if I see some opposite price action contra to my trade, I will be looking at booking my trades around here. And when we are around these levels, this is where I will be looking at initiating buy trades. Now, again, this is not just for tomorrow, but for days to come as well. If we are below this, we will as well look for a trade on the short side, needless to say, right? This is also again a daily fib level, so it will hold some importance. Now, for trades on the long side, we'll again use fib for this last down move which came in. And we can initiate long trades once markets are going up above this. So this entire move can also be a expiry based move because what I had also observed today was while I was in the expiry special trade, even when the price action was showing uh, some green candles on a smaller time frame, the put options were simply not refusing to come down. They were exploding. So that is the reason with that because people were exiting those trades. There were people who would have sold those particular put options. They were exiting those trades, so they were punching buying orders, creating demand, and that was the reason they were exploding. So this can also be an expiry move. Both DIIs and FIIs have been net buyers in the cash market today. FIIs have been net buyers in cash market today after a long, long time. And that's an interesting fact as well. So yes, I will be looking at a trade on the long side around here. And in case if market has to retrace and give us some retracements, we are ready for that as well. And this will be the brief and simple trading plan for tomorrow, right? So yeah, that's a wrap for today's expiry breakdown and tomorrow's trade plan. Remember, every trade, win or loss, adds to your experience if you take the time to reflect. As I always say, the market rewards clarity, not chaos. If you enjoyed the video, hit that like button, share it with your trading buddies, and subscribe to stay tuned for tomorrow's setup. Until next time, trade smart, stay disciplined, and keep learning. Cheers, guys, and thanks for tuning in.